Good morning. This is Tuesday, the 24th of August, 2021, and this is Steve O'Hare from Signal Centre, and I'm on my own again today. Unlucky you've just got me while Joe's away on holiday, and I'm going to run through the market highlights and then dive into the analysis before the gun to head and the day ahead. So let's take a look at the market highlights. This is courtesy of IG Morning Call. Asian markets have followed up the positive sentiment seen throughout European and US markets yesterday, with the Nasdaq closing at a fresh record high. The Hang Seng saw the most prominent gains, while the Australian ASX 200 once again lagged its regional counterparts, the lockdown obviously impacting there. Nonetheless, the positivity seen across global stocks came despite a raft of disappointing PMI readings yesterday and a decision to cancel plans for a vote on the $3.5 trillion budget plan proposed by Joe Biden, a mere $3.5 trillion. The day ahead looks quiet in terms of events, with US new home sales providing one release of note. Aside from that, we are likely to see a growing focus on the Jackson Hole Symposium, where expectations are gradually shifting towards a more dovish scenario than previously priced in. So we'll get that on Friday. Before that, let's dive into the charts and let's take a look at, why don't we start with cryptos, Bitcoin. I'm going to be doing a video on this later on. We'll be able to catch on here, look into a little bit more detail on this, looking particularly at Cardano as well, which is leading the way. And so Bitcoin, we're still in a potential head and shoulders formation. It's broken out, so it's looking less and less likely. However, the thing with this chart on the weekly basis, the candles are getting smaller. So that shows signs of momentum stalling. We're quite close to the 61.8% Fibonacci retracement, which is a very decent technical level when we look at Fibonacci or retracements in any markets, not just Bitcoin. So 51,000 that comes in at. We have a measured move target from this triple bottom formation coming up at 52,300. Above there, we have resistance at 57 and the 60,000 level before the all-time high, just around 65,000. On the downside, levels to watch. Let's drill down. Well, let's take a look at the daily chart for a start. Yesterday looked like it was going to be a great day to start with, but then price action dropped later in the afternoon. That formed a shooting star, so that's not ideal. The candle that on the daily chart shown at the moment is a hanging man. Again, that's a little bit of a reversal candle, but still got the rest of the day to play out. So that could all change. So don't be too concerned about that. And again, I start to sort of see signs of a head and shoulders formation. Hopefully not for the bulls out there. But yeah, support coming in really at the swing high, and we've retested that. It's now support. So let's draw a nice supportive line in there. Let's make it blue to show its support. I like to draw blue lines for support, and let's get rid of that one. Red lines for resistance. So really need to break above this level here. Again, let's get it in red so it's clearer. 50,560. We're trading a bit mid-range at the moment. Let's try and get our ATR bands are on there. These ATR weekly bands, pretty good technical bands to look out for. We're mid-range at the moment, which is normally where you start the day. So yeah, let's think about really the resistance coming in around about 51,000, which we have also. So there's a bit of confluence there, and dip buying should take place around about the 48,000 level. So okay there. So that was cryptos. Let's go into commodities. Commodities, little bit of movement now we're getting on the oil and gold. Obviously, remember the don't forget this oil market. This is a negative formation, and although we've got next Tuesday, we've got about a week to go before the end of the month. If we close around about these levels or lower, then for me there's going to be more of a correction. However, we've got a week to change that, so come on the bulls. On the daily chart, we've seen a lovely reversal from this support line, which is a previous support back on the 20th of May. We've bounced off there really nicely, and we've even broken above these swing lows. So that 64.91 for me is key to stay above there, and that should allow price action to kick on. We drew a short-term trend line from the 73.85, joining up the 69.39, 12th of August from the 30th of July, and we've had multiple hit points here. Now we've broken, closed above it yesterday, and that looks pretty good. Even if we do get a swing back to around about the $65 level, I'd be a buyer there, looking for further price action moving higher. So I am short-term bullish and long-term bullish on oil. So gold, how has that played out in gold? Obviously, we've got this really weird looking candle here. Oh, this is obviously the monthly candle. Let's get rid of that. Just have a look at the weekly, see what that shows us. The bullish hammer for me is really important. It bounced off. This was a late night Sunday, start of the week Sunday night, no one about, and we had a very highly volatile, low liquidity move down to retest this 1677 level, and price action moved higher, and we're now retesting the downward trend of resistance, which is from the 1916 high, which is the May high. So looks like we're going to test it, get above there. Really need to push above, for me, 1835 to really sort of shrug off this bearishness that we've had. This is where we'll get the resistance level coming in here, and get rid of this one. This is a bit of a flag formation, which we're breaking up above. Flag formation, if we take it from there to there, looks pretty nice, doesn't it? So that targets a move towards 1850. So it looks pretty positive on gold, trading just around the 1800 psychological level. I think this 1790 to 1810 is going to act as a pivot level. So getting above 1810, I'm positive. Below 1790, I'm not so. So that's a watch. Let's take a look at indices now. So we've had pretty bearish candles on the weekly charts that we can see here. All the way through, they were bearish. However, we've started off the week on a positive note, and that's great. We can see the reaction, or the swing low, got down to just below 7,000 on the FTSE, and we pushed higher on a Friday, so that settled things down nicely. And obviously yesterday we spiked up to 71.50. That's the highest level we've been since obviously 18th of August. But before that, you can see the sort of how important this sort of like level is, all the way back to 71.50 to 71.80 is a decent band of resistance. We've got 72.35 as the yearly high, and that will be a target if we can break above there. On the DAX side of things, spiked up to 15,941 yesterday, and today we've been close to that 15,931, but we've retraced slightly, and just still trading a positive note at the start of the day. On the Dow, decent uptick from this upward trending support line. This is a morning doji star formation, and that's kicked on and looks really positive now. We look primed to take out the all-time high on the Dow, 35,630. Nasdaq's already done it. We've got the new all-time high overnight, 15,387 on Nasdaq. So the tech sector is looking pretty decent, pushing higher, and no slowing that down. Even breaking out from this this expanding wedge formation, which we had, broke to the downside, face a false breakout to the downside before recovering and pushing higher. I mean, look at the move on the open yesterday. That was pretty formidable. S&Ps, all-time highs in S&Ps, not far off the 4,500 level. 4495, just trading just below there again. nothing really slowing this down. Aussie 200 under a little bit of pressure, just down to the lockdowns we're expecting in Australia and New Zealand to continue. They're going to be lagging behind the rest of the world when it comes to opening up the economy. China 50 is doing its best to fight back. It's still got a bit of a way to go. Really, next resistance level comes in at about 15,620. That's a decent downward trending resistance from the June highs. Hang Seng also has this downward trending resistance, so we've got plenty of room on the upside for a push higher to continue over the next 24 hours. And Nikkei also, we had this triangle formation, which we sort of did break below. Let's get the better picture here. This is the daily chart. We did poke our head below it. That was on Friday and reacted really nicely from it. So again, potential for the upside. 28,300 is the target there, which is about 500 points higher. So let's take a look also at FX. I'm sure most of you have come for FX. So starting with euro dollar, oh, let's start with dollar. Dollar's had a little bit of a pullback from, this is the daily chart, from the heady heights, 93.72. That's an evening star formation, and we expect for a little bit more weakness to retest the upward trending support line coming in at 92.68. So a little bit more weakness in the dollar we expect. That should lead to a little bit of a recovery for euro dollar. We can see the sort of the opposing formations that have been formed on this chart. This is the daily chart as well. 2 positive days and price action above the resistance and retesting the resistance around about 117.53. However, you know, this could sort of turn on the sixpence really, so don't get too carried away with it. Cable, obviously, bullish engulfing yesterday, which took out Friday's price action, which was quite muted, and we've already had a spike higher up to 137.48, retraced from there back to 137.15. So pretty volatile this morning already. Inverse head and shoulders, it's at mid-range. It's not a great one. I wouldn't hang my hat on it, but I do like it when I do see these formations, whether they're at the bottom and the top of the trend or whether they're mid-trend as well. So have to listen to it because the formation is the formation. That's how the price is reacting. So it does digest all that bullish bearish scenario, and for me, I really need to clear, I would say clear the 110.60 level to have a potential for a spike higher. That would be obviously the dollar recovering. As the dollar is weaker, we've seen price action or the closes, it's hanging around the same level. So although it feels weaker, the dollar yen story is a little bit different and playing out just like muted at the moment. So I still feel bullish on dollar yen. That has plenty of opportunity to move lower. So the Aussie 200 recovered nicely, but again, I still feel this has got a lot of resistance coming up for. It's facing a lot of resistance around about the 72.85 to 73 or 74.30 level. So there's a band of resistance here, which I think the Aussie dollar will struggle to get through. So moving on, let's have a look at the gun to head. Boom, boom, boom. So what did I do yesterday? Let me see. I bought dollar yen 109.92. The stop was at 109.80, and we were targeting 110.16. So how did we get on? Dun, dun, dun. A little bit unlucky, really. A bit devastated by that. So I was looking to target move to 110.16. We got up to 110.15, just short of 110.15. So I was only a tick away from the target, and then I got stopped out. That's a bit deflating, but that's the way the cookie crumbles. So let's take a look what we're going to look at today. Now, for me, the indices are maybe the one to be going with Is there any opportunity in the DAX? I like the DAX. I would like to buy the DAX a little bit lower, around about the 15,800 level. So not really at a prime level for me. Again, FTSE would rather buy it lower. They're all a little bit mid-range really for me. So am I going to? I'm not going to touch Bitcoin, not with yours. Well, maybe if we get a little bit more dollar weakness today for another sort of 24 hours, this may give the gold a little bit of an opportunity to spike. Again, prefer to buy a dip around 1790, but quite happy to take this on because we are forming a little bit of a bullish flag formation. Hello, Sailor. Might just have stumbled across something, Stevie boy. So let's set longs here. There's a gun to my head, so I've just got to do it just above the 1800 level. I can have a nice tight stop on there of about 6 ticks. Let's get it below there, 750. Yeah, why not? Let's go for this. We're going for a 3-to-1 risk reward. We're going to target a move to 1824.39, getting long at 1801.89 and stop at 1794.39. I'd like to have the stop below that 1795 level just from a psychological point of view. So yeah, that's what I'm looking for. 3-to-1 risk reward. There's the levels there. I'll pop that into the sheet and stay on top of that. So yeah, day ahead. Let's take a look at the day ahead. Again, this is on the basis of or provided by IG. IG provided a morning call daily report, which is really handy to look at. Economic calendar only showing really new US new home sales of any interest. The July sales to rise 1% month on month. Market to watch, really all the dollar-based crosses. And that's about it. So that's it for the day. Hope this has been informative and entertaining, and look forward to joining you all again tomorrow. Thanks very much.